It just dawned on me that I didn't have my mic on. So once again, good evening. Good evening. I hope and trust you are well. We are in Learning Unit 3, and the topic for Learning Unit 3 is depreciable assets. Learning objectives. Number one, apply the different methods of depreciation. Two, make the necessary accounting entries for depreciation. Three, explain the purpose of an asset register. Number four, the 4 steps of asset disposal, which we'll be doing today. Number five, record entries concerning depreciation and asset disposal in the general ledger and general journal. And finally, number six, prepare the note to the financial statement relating to property, plant, and equipment, which we will not see today, but we will say for next week. Can you believe it? Can you believe it? Can you believe it? All right. So those are our objectives. Now, before I jump straight into what it is that I would like us to do, I did give you some homework yesterday, and I asked you to please go and look at the theory of Learning Unit 3. I gave you the link, I shared this with you. This should look familiar. I then asked you to attempt 3.2, okay, to attempt 3.2, which you made use of the straight line balance method for depreciation, okay, following the theoretical explanation of this unit. And I also warned you or informed you that we would then be doing 3.3. So if you have not done that, please go and do that first before continuing with this recording, because otherwise you will not understand what is going on. You will not understand what is going on. So please do yourself that favor of going through that before proceeding any further. That's it. Let's get cracking. Let's get cracking. Okay. Appreciation is actually a very interesting topic. So here we are, Learning Unit 3, question 3.3. Let's rock and roll. Under the required, it says prepare the depreciation and accumulated depreciation accounts in the general ledger of Sterling Jewel CC for the financial year ended 31 August and 29 August. So we're doing this not only for 31 August, but also for 31 August 2008, but also 2009. And then finally it says, show the depreciation adjustments and closing transfers in the general ledger of Sterling Jewel CC on 31 August 2008 and 2009. Okay, so as you will learn from question 3.1, which we covered in the theoretical video, and 3.2, which you would have attempted, okay, this is more of the same. There's only a slight difference in the nature of the question that they are asking. So let's see. Up top there it says Sterling Jewel CC, a registered VAT vendor, bought a non-passenger vehicle for 288,144 Rand, including VAT, on 31 May. Okay, so first thing you always want to do, right, is you want to build a timeline. So 31 May is the 5th month. Okay. And this was what? 31 May 08. Okay. And here they told us that our financial year ends 31 August. 31 August 08. And we also need to do this for 31 August 09. So here to here, it is 3 months. So we're saying July, June, July, and August. Okay, 3 months, 3 over 12. And here it's a full year. So here 12 over 12. Right. Okay. Now that we have our timeline, we also need to write down the value of this asset. Okay. So now we have to ask ourselves, this time they said including that. Okay, so they said 288,144. Okay, including that. Now we all know that whatever VAT we have here, it is input VAT. Okay, and input VAT is a current asset, so we can claim back this VAT from SARS. So therefore, it's not part of the cost of the asset. So we must use the VAT exclusive amount. And we know we get that by saying 100 divided by 115. Okay, so the actual value of the asset, once you've calculated that, will then be 250,560. That is the cost price of the vehicle that we are talking about here. So, without further ado, we have two periods that we are then calculating depreciation for. We're going to call this first one A, and then the next one is B. Okay, so you do yourself a favor by just doing the calculations first before actually taking the time to record transactions. So 33%, sorry, 33 and 1/3% is the depreciation rate. So for us to calculate the depreciation that took place in the A portion, we would then say, okay, and remember here we are on the reducing balance method. All right, we are on the reducing balance method. So we would then say 250,560 times, okay, times our depreciation rate, which is an annual depreciation rate. So we would then have to say 33. Let me actually do it like this. I want to put it as a decimal. 33 and 1/3 is the same as saying 0.3333. I'm just going to 36 decimal place. Okay, times 3 over. Ooh, I'm now going on into the other side. Let's do this. This times 3 over 12. What does it give us? Okay, if you calculate that, you should then get for A 20,880. Okay, so that's the depreciation we get at A. So we're happy with that. We then proceed to calculate for B. For B, remember we're on the reducing balance method. So the reducing balance method, we say cost price of the asset minus accumulated depreciation will then give us our carrying value. Okay, then our carrying value, we then times by our rate of depreciation. Just going to put here dip rate to get the depreciation, the dip for the year. Okay, so you can just quickly substitute values into this. You can see we have 250,560 minus accumulated depreciation of. So this period's depreciation becomes this period's accumulated depreciation. Okay, so take note of that. So 20,880. Okay, all right. So then you can quickly just say, you can just put this in brackets and say 12 over 12, just to show you this is for the full year, times the 0.333333. Okay, when you times that, the depreciation that you will get should be 76,560. Okay, now we have all the depreciation that has taken place This depreciation took place for, in red, it's the depreciation up to 31 August '08. And in orange, circle that. In orange, we're talking about depreciation up until 31 '08 '09. Okay, right. So then now, our next step is now to record what has happened here. All right. Now, they started off by saying, asking us to do this in the general ledger. But we know from our bookkeeping cycle that we start all our recording into the books in the general journal. So that is where I want us to start. That's where I want us to start. So the first thing that we need to do is to record the fact that we have had depreciation. Okay. So as you well know at this point, depreciation is an expense. Okay. So you would then come here, you would say depreciation. Okay. And this is obviously something that happens in the, let's get rid of these unnecessary columns. That is an expense. And the other account that's then affected is accumulated depreciation. Such a brilliant singer, eh? Yes. I will remember you when I get famous. Yes. So, right? Yeah, I don't know why it's 2009. This should be 2008. And this should be 2009. Okay, so we quickly copy and paste because actually let me just delete this table so as to make my life easier. Then I can just copy this one. Just like that. The joys of technology. So here we have 20880, and then here we're crediting 20880. Okay. So that's how we then record 2008. But then we know that at the end, we also need to close off our depreciation account, our expense account. Okay. So here, remember, you also need to write your narration. Okay. So under your narration, you put it in brackets just to tell us what went on with this particular transaction. Okay. So you can call it depreciation adjustment. Okay. Then, like I said, you can just throw that in brackets. Okay, and then we want to close off depreciation. Accumulated depreciation, we're not closing off because it's a negative asset. Okay, so here, this gets closed off to the profit and loss account. Okay, and then let me just quickly copy and paste. Where's my mouse? I don't see my mouse. Okay, where's my mouse? Oh, being interrupted by my trackpad. Okay, there we go. So that one we want to, let's just do this. Work with me here, work with me. Okay. We want to credit depreciation because remember we're closing off. So closing off, can you see initially we debited, now we're crediting. And we are then going to general journal there and general journal here. And then here we're debiting 20880. 880. These font sizes are trying to interrupt what we are trying to do here. Okay, right. And here under narration, you are going to put closing transfer. Okay, and you are done. Okay, so literally, sorry, excuse me, literally for 2009, you're doing the exact same thing. So if we wanted, we could actually just quickly get rid of this here and literally copy this here. And then what we would do is we are just changing the amounts. Okay, because obviously our depreciation in 2009 was 76, what we have over here. Okay, so there you go, 76. Okay, and then we're closing off that same amount to the profit and loss, 76, 560, and here 76, 560, and you are then done. You are then done. Cool. So now we've done the general journal. Now we obviously just need to do the general ledger. So, you know, depreciation is an expense, so it increases on the debit side and it decreases on the credit side. Okay, so let us rock and roll. So again, here we're saying, okay, for 2008, we had here we would have put accumulated depreciation, the contra account. So I'm going to copy from here to show you exactly what we're doing. Okay. Okay. And that is then 20880. Okay. And then we come here and accumulate depreciation. We're crediting it as we have done in the journals. So here, and say GJ and 20880. Okay, so there you can see the double entry taking place. Okay. Then, and I'm just not throwing in the date just to save us time. Okay. Then we know that this one for 2008 is obviously getting closed off. Okay. It is then obviously getting closed off. So then we have to credit the profit and loss account, which is what we did over here. That would happen on this side. Plug that in there. And then 20880. Okay, we don't do anything in the accumulate depreciation because it's not a income account. We need not do anything there. And then literally we do the same thing for 2009. Oh, we forgot to change. Oh, we did. Sorry. There we go. And then obviously this. Let's also come here. That's GJ 76560. And ladies and gentlemen, you are home and dry. You have finished the first exercise. We have finished the first exercise. I lie. There's one last thing we needed to do. Accumulated depreciation here. We just needed to record 2009 DJ. And that's the 76, 560. So that was exercise 3.9. Okay. So please go and make sure you practice, understand that. The key thing that they were trying to show you is that we use the VAT exclusive amount. We don't include the VAT inclusive amount when we are looking at the cost of our asset, okay, to begin with. That is something you did not have. And then they also were showing us the reducing balance method. That was all we were really tackling here. In learning unit 3, question 3.3. So let's now go to 3.8. And here it gets a little bit more technical. But we are yet again just practically going through this the stuff you guys went through in the theory side. So here now we're going to see a practical illustration of the steps of asset disposal, what we do. So step number 1, all right, we're taking the cost price out of the books. Step number 2, we taking accumulated depreciation out of the books of the asset we have disposed. Then we're recording the sale, okay, depending on how we disposed of the asset, okay. Was it a cash sale? Was it a credit sale? Or was it a trade-in? Okay. And then finally, did we make a profit or a loss on the disposal of this asset? So actually, let's do this. Let me just screenshot this so that we have a reference point. So you can see as we go through the exercise, the steps being taken. The steps being taken in connection with our asset disposal. In connection with our asset disposal. So let's read the question 3.8 and see what is going on over there. Over there. All right. So there it says prepare the following ledger accounts in the books of beauty products for the financial year ending 31 March 2004. Vehicles, accumulated depreciation, all right, on vehicles, depreciation, asset disposal, profit and loss on trade in or disposal. Show the relevant entries made in the subsidiary journals on 1 April 2003 and on 31 March 2004, respectively. Okay, so let's read our question. They say the following balances, amongst others, appeared in the books of beauty products on 31 March 2003. Vehicles, 276. Okay. Oh, by the way, at the bottom of the question, they said ignore that. So this vehicle is 276. We need not worry whether it's the VAT inclusive or VAT exclusive. Accumulated depreciation on 31 March 2003 on vehicles was 74,400. Additional information on 1 April 2003, a vehicle with a cost price of 84,000 and accumulated depreciation of 52,380 was traded in on a new vehicle bought from Kendra Motors. The purchase price of the new vehicle was 135,000. Okay, invoice. Okay, so this lets you know invoice S434, which basically lets you know that you actually bought this on credit, right? And the trade-in covered 30,000 of this amount. The balance was financed through a hire purchase from Zeda Finance. Beauty products depreciate vehicles at a rate of 25% per annum, according to the diminishing balance method. The information given above refers to all the movements relating to vehicles for the financial year ended 31 March 2004. Okay. Okay, all the movements. Okay. So basically, they're letting us know there were no other movements outside of what has been mentioned here. So, first thing, like we did before, you want to draw your timeline. All right. So, we're here. The financial year starts on 1 April 03. Okay. And closes on 31 May 0304. Okay. This is our financial year. Okay. Right. And on the first, they tell us that we purchased a new vehicle by means of trade-in, so a new vehicle, which is valued at 135,000, and we had to do a trade-in in order to get this vehicle. And the value of our trade-in was 30,000. All right. And then the value of the vehicle that we sold, at least at cost price, was 84,000. Okay. And our depreciation rate is 25. Okay, so they want us to record in the journals what took place on the 1st and what took place on the 31st of March. I've been saying May, but that's March. Okay, right. So here, you obviously have to start with what happened on the 1st. So the easiest way to go about this is to start with the actual purchase of the vehicle. And with the purchase, we know we bought on credit, right? So since we bought on credit, we're going to write the name of our creditors. Okay. So first things first, vehicles is increasing, so we're debiting that. Okay, it's an asset. Vehicles. Okay. Vehicles. Okay. And that was for 135,000. Okay. And so here, copy, paste, 134,000. And this was a higher purchase. We could have written creditors, higher HP loan. Okay, higher purchase loan. Okay, and that was from Zeda Finance, if I'm correct. Finance this. It wasn't it Zeda. Is it Zeda or Zeba? Let's see. Zeda. Okay. Okay, so that's the first transaction. Now we can begin with our cycle here. Okay. So step number 1 is to remove the cost price. Can you see that? Out of the books. Okay. So what must happen here? To remove the cost price, we're basically now reversing this. We're saying vehicles. Okay, we're removing the cost price of the vehicle that we've disposed of or that has left us. So in order to dispose of the vehicles, we use then the asset disposal account. Asset disposal, and obviously at the cost price of this vehicle. The vehicle, they said, that we disposed of, the cost price was 84,000. Okay. We then say, going to debit and credit 84,000, 84,000. Okay, so first thing has been done. Then you now need to follow the second step. Second step is to remove the accumulated depreciation. Take accumulated depreciation on this asset that we dispose out of the books, which makes sense because we no longer own or have this asset. So why should its accumulated depreciation be sitting on our books? Okay. So accumulated depreciation is a negative asset. So we would have been crediting a negative asset. You know, assets increase on the debit side. But because this is a negative asset, it increases on the credit side. So now that we are taking it out of the books, then that means we are debiting accumulated depreciation. Okay. And they told us the depreciation that we've had on this vehicle that we've disposed of, second line under additional information is 52,380. Okay. And again, the account that we'll then be crediting is this temporary account that we use only to dispose of assets, asset disposal. Okay, and we're crediting that account by the same amount. Okay, so far so good. Okay, so far so good. Okay, so we finished step number 2. Then we go back and say, okay, but what is step number 3? Step number 3 is we need to record the sale. We need to record the sale of or the disposal of the asset. Okay, how did we dispose of this asset? We took out a hire purchase. We had a trade in. So here you can see your steps actually guide you. So we need to debit the creditor's control or the hire purchase loan in relation to a trade in. Can you see that? So here we're then going to debit HP loan ZEDA. Why are we debiting that? Because we're reducing the balance of what is owed to ZEDA Motors or ZEDA financing, right? Because remember, the value of this vehicle is 135,000, but because we've actually brought a vehicle to trade in, it means we're decreasing. Okay, and they told us that the value of our trade in, I want to show you, is 30,000. So we disposed of this asset at 30,000. That is how much we disposed. That was what the market says the value of this vehicle was. So again, we then will credit asset disposal. Disposal. Okay, and that also is then 30,000. Okay, right. We are moving. We are moving. Okay. But now we must also then establish, did we make a profit or a loss on the sale of this asset? How do you calculate that? And this you would have not yet seen, but you will see in the homework that I am giving you. So to calculate, I'm going to give it to you tomorrow morning. Okay. So to find out whether you made a profit or a loss on the sale of the asset, you would then say selling price. Okay, the selling price that you sold for, which in this case is 30,000. Okay, in other words, the trade-in value minus your carrying value. What was the actual worth? When we say carrying value, we're saying what was the actual worth of this asset? Okay, it will then either give you a profit or a loss on the trade-in or the disposal, the sale of this asset. So how do we get the carrying value? This is the worth. So it would be your cost of 84,000 minus your accumulated depreciation on this asset of 50,000. How much did they say? 52,380. Okay. So let's see. Let's get out our calculators. See what that comes. Is my calculator. So 84 minus 52,380. And that gives us 31. So can you see? Already you should be able to see. We unfortunately made a loss. Why? Because your carrying value, can you see, is 31. Our selling price was only 30. Okay. So it's greater than our selling price. If the carrying value is greater than the selling price, we've made a loss. So it's 1,620. So here, we're then going to write loss on trading. And we're debiting that because a loss is like an expense. Trading. And I believe should be vehicles. Okay. And once again, the other account that we are then is affected is asset disposal. Right? That loss was 1,620. 1,620. Okay. Right. So we have basically recorded the disposal of the asset. Okay? We recorded the disposal of this particular asset. All right, which happened when? On the 1st. And we've also recorded the purchase of the new vehicle, which happened when? On the 1st. So now what we then now need to do is to actually record the depreciation that has taken place here on the new vehicle. Okay, because we have a new vehicle. On the new vehicle, where can I put this? I'm just going to move this calculation. Okay. Down there. Okay, so we need to calculate the depreciation on the new vehicle, which we said is 135,000. That's the value. Okay, and then we need to calculate the depreciation on the other vehicles that we have. Okay, if you look there in your textbooks, it says the vehicles were valued at 276,000. This was the balance on the 31st of March 03. Isn't? They said 276,000. And then your accumulated depreciation on vehicles, AD, was 74,400. This is the day before the 1st, 4th of 03. Okay. So in other words, remember we only sold this vehicle on the 1st. So this vehicle that we sold on the 1st was included in all the vehicles on the 31st. Okay. So, but let's first do the easier thing first. Let's calculate the depreciation on the new vehicle. And here they told us we're using the diminishing balance method, but there's no previous depreciation on this new vehicle because it was only bought on the 1st. All right. So it only has a lifespan of 12 months, so 12 over 12, okay, times 25%. will then give us the depreciation on this particular vehicle, the new vehicle. Let me just clear this. 0.25 times 135, and that is the depreciation you have on the new vehicle. So that's 33, I think 750. Are we correct? Yes, that's correct. Then we now need the depreciation on the other vehicles, right? So first things first, before we can proceed with that, we need to calculate. Remember, to calculate depreciation, you get the accumulated depreciation, let me say this, depreciation on the reducing balance method is the carrying value times the depreciation rate. But the carrying value is basically the cost price of the asset minus accumulated depreciation. So any depreciation that has happened on this vehicle. So in other words, any previous depreciation that would have come from the periods represented by the green arrow. So let us begin to calculate. We know that the cost price of all our equipment on the 31st of May, sorry, March, not May, is this 276,000. But this 276,000, like we mentioned earlier, includes, let me change colors, includes the asset that we sold on the first, the very next day, which was valued at 84,000. So we have to take 276,000 minus 84,000 to get the value of only the other vehicles that we still have after the sale of this vehicle worth 84,000. So let's quickly calculate it together. Okay, 84,000. All right, minus. Oops, let me do it this way. 276.23 minus 84.23. So the value of the other vehicles that we have, or let me say the cost price, is 192,000. Okay. But then there's also been accumulated depreciation on these, and we're on the reducing balance method. Minus, so this again, because it's the day before, it's on this is the balance as at 31st of May, March. Ish, guys. All right, it's including the accumulated depreciation on the asset we just disposed of. So they told us the accumulated depreciation, on the asset we disposed of was 52,380. So the accumulated depreciation on our vehicles that we have kept is then 74,400 minus 52,380. So here you got 22 and 20 rand. So to get the carrying value, you'd get the difference between these two, because this is cost price of the, and this is your accumulated depreciation, which is then what? Right. Let's get our calculator again. We can do this together. So yeah, I'm just gonna say minus 192. Okay, so 169. 980. Okay, and now we can apply our rate of depreciation. We had this for over 12 months, in other words, the full year, times 0.3333. Okay, which gives you, let's see, let's try to use our calculator here, times So your depreciation on the other vehicles is 56.94. Okay. Now that we have all the depreciation that has taken place on our vehicles, we can now do our adjustments. And you'll see, we start with the journal as we have been doing. So very quickly, let me see. This 56 plus, we want to plus it to the 33 that we had earlier. Okay. You made a bit of a blunder here. We did not use 33. That is from the previous exercise. It was actually 25% in this exercise. I'm just seeing it here now. Oh, wrong thing. 25. Okay, so let's quickly calculate that. Okay, it's fine. 169,982 times 0.25. So this is 42,495. Okay, so to get your total depreciation on your vehicles, you would add it to this here, depreciation on the new plus the other. Okay, so plus 33,750. What do you get? Total depreciation for the year on vehicles is 76,245. Right. Then we go and do what we did earlier. You then come here and say depreciation. Okay. And then say 76. Two, 4, 5. And then when we have depreciation, we know we have accumulated depreciation. Okay, and that's going to be a copy of that. All right. Sorry, I'm just zooming out so we can see where I'm pulling the numbers from. Okay, but there, I'm sure that's more clear for you. Then we know at the end of the year, we obviously need to close off the depreciation. So again, that's going to be your profit and loss account. Okay, and then depreciation, we're going to then credit to close it off. Okay, so quickly take this here, copy, same amount, same amount here. Now we have another closing transfer. Why? Because remember, we disposed of an asset on the first day of the financial year. Okay, and it's now this loss account here that we need to close off. So here you can see we debited loss on vehicles. So this time we need to credit loss on vehicles. Okay, and therefore we need to debit profit and loss account. So to close it off, here it'll be 1,620. Okay, and here it'll be 1,620. and we're done with the general journal. Okay, but they wanted us to also record in the general ledger. Okay, so I have kept some amounts, okay, just to make our life easier, because I knew we would be racing for time, one way, shape, or form. Okay, so the vehicles account on the 1st of April, right? Our opening balance was 276. Okay, but then we had a vehicle that we disposed of. So this was then going to be asset disposal. Asset disposal. Okay, and I'm basically just now doing what we did in effect over here. Can you see? Vehicles was credited. So we are also crediting the vehicles, but now we're just using the other account that was affected, which was asset disposal. And that was for 84,000. So this is like step number one, remove the cost price of the vehicle out of the books. Okay, right. Then you can go to step number two. Well, or let's stay with step number one. Let's also credit our asset disposal, which we have already done there. There you can see the 84,000. Okay, all right. So step number one is out of the way. Then we go to step number two. We have accumulated depreciation, all right, that needs to be closed off or taken out of the books. So let's go to accumulated depreciation. The opening balance was the 74,400. Then to take, because we know it's a negative asset, so in other words, it increases here and decreases here. So what now must happen? Come here and we say asset disposal. And that was for, how much was it? 52 something. 52,380. 52,380. Okay, fine, no problem. We dealt with that. We then come to the disposal or the trade-in, sorry. How did we trade this in? Did they ask us to do that account? They didn't ask us to do HP loan Zeta. Okay, so you can skip that one. That's fine. Loss on trade-in. Did they ask us to do it? Yes. Okay. So we know from since we made a loss and the details here, we're going to say we're going to debit. Here should be vehicles, isn't? And here should be asset disposal. And right. So that's fine. Okay, we're here. Okay. But then we come here. All right. We come here. And before we go there, we forgot to record the purchase of this vehicle. So here, it's going to increase. Okay. And this is where now we plug in HP loan Zeta. So maybe let me just copy that to save us a second or two. Okay. See, we're running out of time. Better quickly. Nothing new here, but we will get the job done. Okay, so now you can see we've completed all our transactions pertaining to the vehicles account. Then in terms of accumulated depreciation, we had depreciation that took place this year. So depreciation, you know, is an expense. So here we're going to have accumulated depreciation. Okay, and that is to the value of how much? 76,245. Okay, but we must do the double entry. So here we debited depreciation. So accumulated depreciation, we're going to credit. Oops. Maybe plug in the amount then. Right. I was trying to align it, but clearly not working with me. Appreciation. Okay. So after that is done, we can then close off depreciation to the profit and loss account. Did they ask us to do that? No, but we do have the depreciation account, so we need to close it off there. Fortunately, I've just done it for us to save us a second. Okay, so that's fine. We're happy with that. Then we know we need to now close off your profit and loss account. Okay, well, let's say your loss on trade-in for the vehicles to the profit and loss account. Okay, and that, ladies and gentlemen, is done right here. Profit and loss account. Okay, and you are then done. Can you see we've done everything that was required of us? So just again, quickly, we start by removing the cost of the asset out of your books, step number one. And there you can see I've also included which accounts you debit, which accounts you credit. And then step two, you have removed the accumulated depreciation out of the books by debiting accumulated depreciation because you're going to be bringing it down because we know it's a negative asset, right? Then you credit your asset disposal. And then thirdly, you record the sale. How did you dispose of this asset? Okay, typically you would be selling it. Okay. And then finally, step number four, you record whether you made a profit or a loss on the disposal of this asset. Okay. So ladies and gentlemen, that is your 3.8. I will share with you your homework that I need you to complete. Guys, depreciation is make or break. It's coming in your test. Is fast approaching. So guys, please follow the structure of the homework that I've given. Trust me, if you practice that, you watch the videos to see where you're going wrong. They're more detailed. They're a whole lot more slower. You will definitely be fine. Okay, but the practice needs to be happening. All right. So please continue to put an effort into your studies and you will be fine. That said, you have a blessed evening. I wish you all well. Take care.